Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Tuesday morning, July 14th, 2020. And well, profit taking finally came into the market yesterday. We were making a big deal about looking at some stocks that were obviously strong, stocks like DOCU and Tesla and a bunch of, we'll review a bunch of them right now. But here's the main point that I want to make sure that's very valuable in these videos for you to make sure you catch everything that I say. Because there's a difference between whether or not a stock is a buy versus whether or not a stock is a buy right now. And I was very careful in a lot of the videos that I do to say whether or not I would absolutely be day trading it right now versus I wouldn't be swing trading it because it's too late in the move to justify the reward potential. So in other words, as a stock starts to travel to the upside, it becomes lower probability that it's going to continue to moving in that upside, in that direction. So what ends up happening is you wait for too much confirmation and you end up being late into the buying sequence. And then you end up feeling like every swing trade you put on is not working out. And why is that happening to me? Well, it's happening to you because we just need to pay a little bit more attention to when you're buying. You're probably doing a good job, especially if you're following the videos, you're subscribed to the channel. And you understand and you're following and tracking what order flow means, which is how the smart money moves stocks back and forth. But even the smart money has a limit where they say, okay, that's enough. We're going to take a little bit of a break. So I'm sure you've heard it on CNBC and a lot of those other channels where they'll say, I like the stock at these prices. That's what they're basically talking about. But it'll reach a point where they say, you know what, we're pushing it up on ourselves. Let's stop for a little bit, let the stock breathe, and then we'll buy it again. And we ended up seeing that yesterday where there was some really good long ideas, some really good stocks to trade that just saw profit taking. But here's the key. If that happens and you're stuck in a position, you need to know what you're going to do before it happens. And we're very big on scale out or get out and then put the shares back on. In this day of commission-free trading, doesn't it make sense to get out of the position and then put it back on? But there is one thing I want to talk about, which, by the way, if you find these videos helpful, please do me a favor, absolutely click down and subscribe to the channel. And even more importantly, if one of the stocks that we call out helps you, if you find that the trading opportunity met your criteria and you had a winning trade, don't be shy about it. Post those winners down in the comments and the feedback. I'd love to hear from you. It just means everything to me that we're working together as a community and doing well together. But right now, we're kind of in prevention mode. Right now, we're kind of in what are we looking for now? So we're going to start out with the fact that JPM and Citigroup and the banks have earnings this week. Netflix on Thursday. JPM and Citigroup before the market opens. I'm actually filming this in the morning. I'm not sure if they reported or not, so I'm going to do my analysis of the stock based on I haven't read anything yet, and I'm not logged into the news. But we're kind of in what do we do now? What do we do with some of these stocks that if you're holding them, how do you manage them? Honestly, if you're not sure, and I want to give you this one quote that I used all the time in my trading floor. If you didn't have it, would you want it? Big difference between I don't know what to do. You're getting the first answer that comes. You ever flip a coin, you're like, I wanted tails. That's what's going to come up with your trading idea. And if you don't want the idea anymore, if you're not sure if you want the idea anymore, there's nothing wrong with scaling back. If you really like the idea as a trade, but maybe your timing was just really off. Maybe you didn't realize the stock just rallied 8 days in a row. And specifically, I'm talking about DocuSign because I got some feedback about DocuSign yesterday. Nothing wrong with the idea, the timing of where. And remember, go back to the video. I said I day trade it if it stays above the open, if it meets certain criteria. It didn't meet that criteria, so I didn't buy it. But if you did buy it late into that cycle and you held it as a swing trade, it's just important that the next time, and again, the next time is what's key here, you learn from what happened now. And I talk about this all the time in the boot camp, that if you take a big loss, or if you're in the context of taking a big loss, and obviously big loss is relative to everybody. For somebody, a big loss could be 500. For somebody else, it could be 5,000. See that loss as a seminar that you just paid for. So let's say we're talking about Tesla. We'll just use Tesla as an example. Let's say you bought Tesla late and the stock pulled back and you were forced to take a loss because the loss was too big. See that as a $5,000 Tesla seminar in stock trading, and then use it. Use that information to become a better trader next time. So we're going to head over to the charts. Oh, and by the way, if you want to learn about the boot camp, the single biggest, most exciting thing about yesterday was learning how to avoid getting ran over. That's a big deal. You have to first learn how to not lose money So you're around long enough to know how to make money. And if you want to learn about what we're doing in the boot camp, just click down. There's no pressure. Just find out if it's for you. Find out if it's the right investment for you at this time. And this is a tough market for the 30 days of getting everything, including the order flow masterclass. It's a pretty smart investment. A lot of people lost 10 times what the boot camp investment is just in one day. So head on over. I'll put the link down. And we're going to take a look at some opportunities today, and specifically how to manage some trades that we're in right now and what we're looking for in the open today. So JP Morgan and Citigroup both have earnings today, and they look very, very similar. They had a little bit of strength on Friday, which was a little surprising, but what was kind of interesting, JP Morgan took out the lows, looked like it was about to collapse and start heading down into the lower 80s. But of course, it didn't. Rally turned around, and now we have basically a 2-day rally into earnings this morning. I think the stock has zero edge right now. I don't see anything to do in the stock. What's interesting, which we called out recently, was pretty much every higher opening since the last earnings report has been a sell short. The majority of them. And you can just quickly eyeball that and see how many red candles there are here. And we saw that again yesterday a little bit. I want to make this clear. I'm not trading JP Morgan right now unless the stock finally picks a direction. Again, very similar to Boeing, very similar to Citigroup. A lot of these stocks, the banking stocks specifically, just they're in the middle of nowhere. There's no edge. There's no smart money lining up and saying, we definitely want to be buying this stock. Maybe I had a little bit over here, but even still, what did that last for about a week and a half, 2 weeks? Not what we want to see. Order flow is a sustained commitment by smart money. I'm actually staying away from this stock right now. The one that does interest me a little bit more is Goldman Sachs, where we're starting to see a little bit more price action, where there's some more bullish days where the smart money is stepping up and actually doing something and holding that bid where they're closing on the high. So I'm actually going to be interested to see if the stock can stay above the 208, 210 level. But JP Morgan and Citigroup, I'm going to stay away from right now. A stock that really confounded us yesterday, which just really didn't make any sense. Again, we're tape readers. We don't care. We're not reading the news. We're not reading why. It doesn't matter. We're reading the tape. The news is discounting everything into the stock price. WYNN kind of perked up yesterday, and this has been a very frustrating stock to trade as well. And you can see here, once it broke out of the window, came right back down and collapsed again. So yesterday, it actually, if we could just move this over a little bit, it actually was getting back to the level where it broke out. So I'm actually looking right now. It looks like it's going to open up into this 85, 86 area. Excuse me, not 80, 82-ish area, heading up into yesterday's high. So the trade that I'm looking for in WYNN again today, I'm not looking for it to follow through. I'm looking for a failed test of yesterday's high, and I'm looking for the sellers to come back in. So we're going to keep an eye on that one. Let's talk about some stocks that actually did bounce yesterday. We had a few that had some really good relative strength yesterday. Seems like the COVID stocks are perking up again a little bit. We're going to talk about the big winner that we had in the boot camp yesterday, which was, actually, I'll get to it in a second. MRNA, now again, it's been stuck in this range, very similar to what we're talking about. You don't want to get caught in the range, but now it finally broke out. As long as it's above yesterday's close and above today's open, then you can still get long the stock and get long with a little bit of confidence. And we're looking for 88 as the next level. Something that's very interesting is there were quite a few stocks that showed relative strength on a day when the market got hit pretty hard. So J&J, we're just going to go through the list. J&J, P&G, UNH. Now, some of these stocks are not in necessarily trends. They're actually longer term sideways. But here's the key. It's imperative as a trader, you start to recognize if the market's really strong, which stocks are not strong. So you avoid buying those. And maybe in the future, if you understand short selling, you can short sell them. Today, we have the opposite. The market took a really big hit yesterday. And now these stocks were strong yesterday. So we're looking for follow through and continued buying in these stocks when the market was taking a hit. So these would be candidates, despite the fact that they're not really in longer term bullish order flow. They should definitely at least be on your watch list for a short-term trade. And again, the conviction level being much lower based on no order flow, but solid idea based on relative strength from yesterday. The big one that I want to talk about is NVAX, and hopefully you participated in this the same way that we did in the boot camp yesterday. When this stock gapped up last week on the news of the $1.9 billion in funding, we said, okay, it's still a good idea. It's kind of violent. You need to be able to handle the volatility. And I clearly said, let's let the stock pause for a little bit before it takes off so we have a spot to manage risk. Spot paused for 3 days after the gap, and yesterday was the payday. And if you're not familiar with day trading at all, this is what we ended up getting yesterday, a $20 move. And again, this is the value in the boot camp, is being in the right trades and avoiding the ones you shouldn't be in. We just discussed relative strength, relative weakness. We discussed the financials, what to do, what not to do. One trade like this can make your entire month. So again, these setups that we're talking about are the highest probabilities ideas to follow through to reach a profit target, but also we're trying to do them with the lowest risk profile, so that if you do put the trade on, you'll know exactly what it needs to look like if it's not working out. So congratulations to everybody who took this trade yesterday with us in the boot camp. It was just a phenomenal idea. I want to take a look at a couple of stocks that I like that are obvious buying opportunities to me today. So KC, this stock has been strong, making all-time highs, pulled back now for a couple of days. Absolutely a bigger day than normal yesterday. But what I'm looking for, and when I say aggressive, I would say aggressive in my conviction level. Best case scenario, I could buy this around 33 today, which I might not. But if it opens higher and goes flat, we're going to be looking for what we call an opening range breakout. So there's two scenarios here. Best case scenario, it opens lower, tests yesterday's low, and finds support, and then we look for a retest of at least 41 in that area. If it opens higher, goes sideways, then we'd be taking one of our intraday entry signals and looking for it to retest as well. But the better entry would be a flat out test of yesterday's low. And JD kind of meets the same criteria, where we pulled back looking to bid 62, and actually it's going to open lower. So this might actually meet our saturation play criteria. Saturation play, we'd actually have two large red candlesticks looking for the reversal. We didn't get that, but we can still possibly look for it. Now, we might end up getting what we call a bullish U-turn, where the stock opens lower and then trades above yesterday's trading range. Keep an eye on that one as well. So some of the obvious ones that need to be brought up today: DOCU, massive profit taking. And this is actually one of the ones I was talking about in the previous video this morning in Stocks for Breakfast, where if you bought this stock after it rallied 6, 7, 8 days in a row, you just bought it at the wrong time. Now, even if that happens, you could still manage the losses. You could still make the losses smaller by scaling out or getting out if the stock is not doing what you need for it to do, which means you need to have those questions prior to getting into the trade and saying, what do I need to see to still have conviction this trade is going to do what I want it to do? That was not answered affirmatively yesterday, so now you might be licking your wounds a little bit. Maybe even you held on to the trade. Looks like it's opening flat. You need to have a plan going into today that says, if more selling comes into the stock, what do I plan to do? And please, I implore you, do not keep adding to a losing position. It's going to happen once where you make money and you're going to justify it, but the one trade it doesn't come back and you're going to get yourself wiped out. But the point I want to make here about DocuSign and Tesla, we're just going to rattle them off here. FSLY, and last but not least, Netflix, which has earnings this week. All good ideas, but not all good ideas to have been long yesterday. And again, go back to the videos. I've been very clear, not swing trading a new entry long because they've traveled too far too fast. I would day trade it if it met certain criteria, and these stocks did not meet criteria long yesterday. I'll go back to DocuSign as an example, and I'll just give you briefly what we look at on an intraday basis. Here's the opening price yesterday, and if I went into the day yesterday saying I'm not going to swing trade it, but I am looking to buy it as a day trade, it needs to meet this minimum criteria, and it did. The entire day it didn't. There was no reason to buy it because it didn't meet the criteria. So as an active trader, you need to have that criteria. So we have some other stocks pulling back off of all-time highs, which again, we're looking for them to pull back one more day. CRWD, Peloton, Net actually has now reversed 2 days. I'm actually looking for Net around 36 today. I'm not sure if we're going to get it, but it'll be right around yesterday's low. So that's one of the ones that I like a little bit better today. Square. I don't really like this one as much, but I do want to point out a signal that is one that we trade quite often, which is a breakout. Obviously, this broke out into an inside candlestick. Inside candlesticks are great opportunities if they break out again in that direction, like you see here. This one did not, and actually led to a new move to the downside. So I'm actually looking to buy Square on a lower opening. If it opens higher, I'll have to work the order again a little bit more. But if it opens lower, finds a bid, and starts to reverse, I'll be a little bit more aggressive on my share size. SE meets the criteria as well. Lower opening, I'm looking to, and again, lower opening means at worst case scenario, it's going to open at yesterday's low and find buyers. If it opens a little bit lower, then I'm going to look. Here's the key. You're not just going to buy a low opener because it opens lower. But what you need to pay attention here is a failed breakout into an inside candlestick into a trend day down. this is implying we're going to see a move lower. So even if this stock opens higher, I still want to see it test the previous day's low. So getting into the market, obviously we're paying attention to the SPY. This level has been a magnet. So you can see why we moved it from up here to down here. And this is good tape reading. You're adjusting as the market's adapting. This is the level, 315.50 is the level that we've been watching for now 6 days in a row. It needs to pick a side around 315.50. And if and when it does, then we could possibly feel a little more confident. But as of right now, there's no reason to feel confident because the market and specifically the SPY is glued there. A huge thing to pay attention to right now is the NASDAQ. The NASDAQ stocks and technology stocks specifically have carried the market. If you watch any channel right now, especially this one or any news channel, it's been very clear the S&P is flat by itself, the majority of stocks in the S&P, but the NASDAQ, those big cap stocks that are heavily weighted in the S&P 500 are the reason that we kind of keep floating higher. Here's the thing, and it's an advanced thing. It's advanced, but it's really not. It's just kind of common sense. If those bigger stocks, Apple, Microsoft, Netflix, all of these tech stocks that have been carrying the market and holding the market up, if they start to turn, if the weekly candlesticks start to go red, if they go well offered, if the monthly starts to turn down, you need to make a decision now before that happens. If that happens, how are you going to manage a longer term portfolio? Because we could start to see some heavier selling. So have those if-then scenarios, map out what we discussed today, those entry signals and the entry that we're looking for, the price action off the open to initiate new swing trades, very, very clear. You need to see a certain type of open. KC and JD seem to be the better ones that we're looking at that pulled back a decent amount looking to bid today, and pay attention to maybe some 1 or 2 day trades in those stocks that had relative strength today. So have a great day, everybody. Be disciplined, be profitable, and trade like a pro today. Have a great day.